Welcome back to the AI Daily Brief Headlines Edition, all the AI Daily news you need in around 5 minutes. We are in earnings season, and of course, the big question for markets is around AI and whether it is going to be a long-term bet exclusively, or whether we're going to start seeing some ROI for these big investments that the hyperscalers are making in AI infrastructure on a quicker timescale. This has been one of the most ongoing conversations at the AI Daily Brief for months now. Because the big tech companies are so integral to this new technology shift, Wall Street is involved in a new technology shift much earlier than it might otherwise have been, or certainly than it has been in the past. Unlike innovations in areas like mobile, AI is under a financial microscope right away because of the fact that Microsoft and Meta and Google and all these companies are spending such an extraordinary amount of money to build out their ability to compete in that space. There have been a growing swirl of questions around whether that investment is likely to pay off. And frankly, I think that in many ways, it's forcing Wall Street to operate more like a venture capitalist, which is just a very uncomfortable position for it to be in. The latest information to come to this argument is around Microsoft's just announced earnings, which have suggested that yes, the payoff from AI is not going to be immediate, it is a long-term play. So the big news for Microsoft was that its capital spending had risen 77.6% to $19 billion during its fiscal fourth quarter that ended on June 30th. Cloud and AI-related spending accounted for nearly all of that expenditure. For the entirety of fiscal 2024, capital spending totaled $55.7 billion. According to Reuters, Group CFO Amy Hood said the spending was necessary to support demand for AI services, and the company was investing in assets that, quote, will be monetized over 15 years and beyond. Of course, it's not just a question of cost, but a question of revenue. Azure growth ended up being disappointing to analysts, who had expected it to come in around 29.7% compared to the 28 to 29% that Microsoft predicted. Said Daniel Morgan, senior portfolio manager at Synovus Trust, the street doesn't have a lot of patience. They see you spending billions of dollars and they want to see a pickup of revenue in that amount. If these companies do not hit it out of the ballpark and are far better than the estimates, then they are going to be knocked back. And indeed, after the spending forecast was released, shares fell 7%, although it did recover slightly in after-hours trading. In terms of AI-specific growth, AI services accounted for a slightly larger portion of the increase in revenue in Azure, accounting for 8 percentage points compared to 7 percentage points the previous quarter. Overall, Azure AI is now used by more than 60,000 customers, which is up nearly 60% year over year. One interesting little nugget came from The Information, who writes that TikTok spending drove Microsoft's AI business. According to The Information, as of March, TikTok was paying nearly $20 million per month to buy OpenAI's models through Microsoft. That represented close to 25% of the total revenue Microsoft was generating from that business line. Now, of course, as The Information points out, the risk is that the more concentrated AI sales are, the more vulnerable to a shift the business is. According to The Information sources, Microsoft hopes other more reliable corporate customers will make up for that risk. Walmart and Intuit were each paying Microsoft several $1 million a month to access OpenAI's models during the first quarter, as a for example. Another AI detail, as shared by CEO Satya Nadella, was that the number of customers that had bought 10,000 or more Copilot subscriptions doubled between March and June. Financial services firms had been among the biggest buyers. Overall, I don't think that this really changes anything. I think that on the one hand, AI is showing up in revenue. It's not like it doesn't have presence at all, but whether it can meet Wall Street expectations is an entirely different question. I think we might be in a process of slightly repricing expectations when it comes to AI, and if Wall Street can do that in a disciplined and incremental way, that'd be a heck of a lot better than it suddenly deciding that it was just in one big bubble. Now, moving on, yesterday we discussed how Meta had updated AI Studio to allow anyone to create their own AIs and to allow creators to create AI avatar versions of themselves to interact with fans, but at the same time, it has scrapped its celebrity chatbots. Less than a year ago, Meta had announced these celebrity chatbots with people like Mr. Beast, Tom Brady, Charli D'Amelio, Paris Hilton, and more, but they were never very popular with users. Now, frankly, this doesn't surprise me at all. In fact, I would have been more surprised had these things really caught on, but of course, I'm not exactly the target demographic, so I was willing to suspend my disbelief. I think that the new approach, where people get to create their own AIs, and creators can use versions of themselves to interact with fans in a recurring way, seems a lot more likely to succeed than this weird celebrity thing. Finally today, Perplexity, which is both an increasingly beloved but also controversial AI tool for research and searching more broadly, has announced a publishers program. This is noticeable because they've recently dealt with some lawsuits from publishers who argue that Perplexity is infringing upon their copyright. The first batch of partners for the Perplexity Publishers program includes Time, Der Spiegel, Fortune, Entrepreneur, the Texas Tribune, and WordPress.com. The deal includes revenue sharing, access to Perplexity's APIs, and Enterprise Pro for all their employees. Importantly, Enterprise Pro is being offered for free for a year for all of their partners. To me, this is another example of how, even as the courts race to try to figure out these questions of copyright in the new AI context, the market is trying to sort them out as well. That's going to do it for today's AI Daily Brief headlines. Next up, the main episode.